Hey everyone, welcome to the third episode of the online workshop for complete beginners by OctaFX. My name is Ebuka Ambrose, and today we're going to talk about predicting the market. But before I go ahead to before I go over the talking points of today's webinar, I'd like you to comment or type your name and where you're watching me from in the comment section. So go ahead and type your name and where you're watching me from in the comment section. Muhammad says, hi, Mr. Ebuka. Hello. So let's look at the comments. We have Samson from Oshobo. Welcome, Samson. We have Daniel from Abuja, Ade Grace from Lagos, Michael Daniel, Vanin from Benue State, Nigeria, Uche David from Lagos, Emmanuel Orakie from Abuja, Kenneth from South Africa, Brilliant Ovemeso from Abraka, Mikhail from Oshobo, Felix Respect from Abuja, welcome, Cruise World from Lagos, Apapa, Silas from Benin. Massive welcome to every one of you. Like I said, we are on the third episode of the online workshop for complete beginners, and today we'll talk about predicting the market. I'm just going to go over the disclaimer before we start. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation are provided as general market commentary and do not constitute investment advice. Trading is risky. So I want to talk about bonuses that you can get for just participating in the OctaFX online workshop for complete beginners. And the first one is 100% single use deposit bonus per series. How do you get this? You sign up or confirm your participation on this page. You watch all the webinars from the series. You wait for an email from OctaFX confirming that your bonus is ready. You initiate a new deposit request and you claim the bonus for your deposit. The bonus expires on the 3rd of August 2022. You can also get a free trader's guidebook in PDF if you watch all the webinars from the series, you stay active, ask your questions in the chat, or answer my questions, and you would get your PDF handbook via email once the webinar is over. I'm seeing a lot of names in the comments. Massive welcome to you. Baksh says hello from Dakar. Michael Ojakovo from Warri. Samuel from Ondo. Massive welcome to every one of you for joining this webinar. Okay, so what are you going to learn today? Like I said, we're talking about predicting the market. So you would learn orders opened and closed by market price. You would learn the four most important type of news or economic events in NFP, CPI, GDP, and Fed. These names may sound new, and but yeah, I'm going to go into the explanation and give you guys detailed explanation of what these abbreviations are and what the news are. We'll also talk about take profit and stop loss and why you need take profit and stop loss in your trading. And lastly, we'll talk about fundamental and technical analysis. Now, before I start the webinar, if you have questions concerning what you're learning, you can go ahead and type your questions in the comments. I will be checking the comments constantly to see if you have questions and answer your questions. Okay, so let's start. Now, the first thing you're going to learn is orders opened and closed by market price. When you place a trade in the Forex market, you're opening an order, right? And for your financial or for the financial results of that particular trade that is opened to be determined, the trade has to be closed, right? That is why we're talking about orders opened and closed by market price. Now, an order is an instruction sent to your broker to open or close a transaction, to open or close a trade. It could be a buy order or a sell order. Now, let's talk about open orders. So an open order is when you enter a buy or sell trade at a specified market price but haven't achieved a financial result. So what this basically means is that you have opened a trade, right? You just opened the trade. It could be buy, it could be sell, but you opened the trade, but you have not closed that trade. The trade is still open and it's floating, right? So the financial result of that trade has not been achieved because it is still open. Now I'm going to explain to you guys how the financial results can be achieved. But yeah, if you buy an instrument expecting it to increase in value, you have opened a buy position, right? You know, if you buy an instrument, excuse me, if you buy an instrument or an asset, when we mean instrument, we're talking about assets, currencies, commodities, what you trade in the market, right? So if you buy an instrument, I mean, for you to be in profit, it has to increase in value, right? And if you sell an instrument, a currency pair, commodity, for you to be in profit, it has to depreciate or reduce in value. And then you have opened a sell position, right? So that's basically what we mean by open orders, by opening a buy or opening a sell position and at your specified market price, but haven't achieved a financial result. Now, for closed orders, you can say an order is closed when the financial result of the open position is achieved or fixed. So let's say you open a buy, or you place a buy trade, a buy order, and the assets that you bought, the currency that you bought increased in value while it's in profit. Remember, if you place a buy trade, for you to be in profit, your trade has to increase in value, or the asset has to increase in value, right? So while it's in profit, if you decide to close the position, then your financial result would be in profit. But if you place a buy and the asset doesn't increase in value, it reduces or depreciates in value, and you close the position, then you would close the position at a loss, not in profit. Okay, you close the position at a loss. All right, so how do you open and close orders? So you understand what open orders are, you understand what closed orders are, but how exactly do you open and close an order, right? So you can open orders by market execution. Market execution executes your trade instantly. You can also open orders by pending orders. We have two types of orders: market execution, or two ways to open a trade or open an order: market execution and pending orders, right? So I'm going to show you guys just a second. Okay, so I'm going to show you guys, let me refresh this. So I'm going to show you guys what we mean by market execution. So if you go to your trading app and you want to open a new trade, all you have to do is to come right here. See this button, or this icon that looks like a folder with a plus sign. You click it and it's going to pop up a menu that you can use to open a trade of the instrument on the chart. So the instrument on the chart is Euro USD, Euro dollar, right? Now if I decide to change it to GBP USD, which is the pound dollar, and let's give it a little time to load, and I want to open a trade, you can see that it's going to open in GBP USD, right? It's going to pop up a menu where I can open a trade in GBP USD, which is the pound dollar. Okay, so if I decide to use another one and another one, it's just going to and I click the when you open a trade at market price, right? I'm seeing your questions. I'm going to go through your questions, but yeah, just keep them coming. Okay, so a market execution is when, or instant execution, it could be instant on your phone, it could be market on your phone as well, or on your laptops, but this is basically when you're opening at market price. Then a pending order is basically when you're opening at your preferred price at a later time. So it's going to be you can decide wherever you want to place the trade, and price gets to that point and executes the trade, and your trade starts to count. Okay, we have a video on pending orders. The link, you can use the link in the description to go through the online workshop for complete beginners, so that you can understand in detail what pending orders are and how you can use them. But I just wanted to show you guys where and how you can open orders on your trading application. Okay, so let's go back to, all right, so buy orders open at ask price and sell orders open at bid price, right? So when you place a buy, the order is going to execute at the ask price, and if you place a sell, the order is going to execute at the bid price. Okay, so if you want to close an order, now you've understood how to open an order, where to click, the type of executions we have, market execution, pending orders. If you want to close an order, you can either close it manually, or you can use your take profit and stop loss levels, right? So by closing manually, you just have to go to where you have the trade and manually close the order or the open trade. And for take profit and stop loss levels, which I would explain in the course of this webinar, it's basically an automatic instruction that you give to your broker to tell your broker, look, I've placed this trade, but I want to take profit here if market puts me this much in profit, or I want to stop my loss here so that I can halt further advance of further advance of markets in the wrong direction, so that I can't, or in the direction where I get to lose a lot of money. So just stop me out here. I'm okay with stopping out here, or take my profit here. This is the amount of profit I want to make from the market. So that's an automatic way to close your orders, or you can close them manually. So buy orders close with bid price and sell orders close with ask price. What this means is that if you place a buy order and it opens at ask price, the bid price has to get to your take profit level, right? So if the ask price gets to your take profit level, it's not going to close. The bid price has to close it up at your take profit level. So that's basically open and close orders and how you can open and close an order. Okay, all right, so we're going to go ahead to talk about the 4 most important type of news. The 4 most important type of news. Okay, someone's Shiva said, I once entered a trade without setting a stop loss and take profit. I left it the next day and discovered that the trade closed by itself with a loss. Please, I want to know why the trade has to close on its own. Well, it all depends on the amount of money that you have on your trading account, right? So you're not going to, if like you said, the trade closed with a loss, so the trade, you're not going to lose what you don't have, right? So if you're in a certain amount of loss, the trade is going to just automatically close. Yeah, so, but this is why it's important to use stop loss and take profit, and I'll go into detailed explanation of that, or on that. So it's important that you stick around on this webinar to find out how you can use take profit and stop loss and why you should use it. But now we're going to talk about the 4 most important type of news, which is non-farm payroll, NFP, consumer price index, CPI, gross domestic product, GDP, and the Federal Reserve System. So in Forex, traders basically look at this economic news and reports to assess its influence or impact on interest rates and monetary policy, right? So when you see a news that suggests a more hawkish or a more aggressive central bank, then you see that news will tend to push the Forex pairs up in value, or the currencies up in value relative to other currencies, while a dovish or a peaceful news can cause a currency to depreciate in value relative to other currencies. Okay, so let's talk about NFP, which is an abbreviation for non-farm payroll. So NFP is part of a monthly report that represents how many people are employed in the United States in manufacturing, construction, and goods companies. NFP is a part of a monthly report that represents how many people are employed in the US in the manufacturing sector, construction, and goods companies. Now, NFP gets its name from the jobs that are not included. you have the farm workers, you have those that are employed in private households, you have the non-profit organizations, right? So it's a non-farm payroll, more like non-agricultural payroll. So what does the NFP report contain? The first thing it contains is the non-farm payroll increase, right? The non-farm payroll increase is basically the number of new jobs that are added in the US labor sector in the previous month. Now, the data includes employment in the manufacturing sector, like I said, construction, goods sector, and remember, it excludes farm workers. NFP report excludes anything that has to do with, agriculture. So, second thing it contains is the unemployment rate of the US, which measures, the unemployment of individuals in the United States. The third thing is the sectors with the mostly added jobs. So it's going to give you an idea as a trader, possible sectors to invest in, as sectors that has added more jobs would have, added experienced growth. So when you get the reports from the sectors with the mostly added jobs, they're going to have an idea of which sectors are experiencing a huge amount of growth, which sectors are experiencing a lower amount of growth. The fourth thing that the NFP report contains is the average hourly earnings of the workers in the United States. So you can equally compare to know if there has been an improvement from the last NFP or a reduction from the last NFP. It can also give you an idea if the economy is increasing, if the economy is growing, or the economy is reducing. And the last thing the NFP report contains is revision of the previous NFP, right? So they basically give you the previous figure, the previous report from the previous NFP. Now, what you can do with these figures is to actually understand if the NFP is it's an uptrend or if it's in a downtrend. If it's an uptrend, that that it's increasing in figures or percentage. If it's a downtrend, it's reducing. So you can also use this to get a clear sight of the unemployment or the employment situation. Now, one way that you can get the reports from NFP is to use the OctaFX economic calendar. Before I show you guys how to use that, let's talk about when NFP is released. So NFP is released every first Friday of the month at 8:30 a.m. Eastern time, right? So you can do a conversion of this time to your own country's time zone to know what time exactly NFP would be released in your country, right? So if you're in Nigeria right now, all you have to do is add an extra 5 hours to 8:30 and you get the exact time NFP would be released in Nigerian time. Okay, I'm seeing someone saying something about audio. Give me a sec. Okay, can you guys hear me now? Just want to be sure that you guys can hear me before I proceed. Can you guys hear me now? If you can hear me, just go ahead and type in the comments so that I am sure you can hear me and I proceed. Okay. Emmanuel says he can hear me. Okay. All right. So let's. I was going to show you guys how you can get the reports from the NFP, right? So you go to the OctaFX website, octafx.com, and then you want to come to analysis and education, and you also want to come down to analytics, right? And you go down to economic calendar. So the economic calendar consists of economic events from different currencies, different countries, so you can get an idea of what's happening economically in countries. It can give you an idea of which country's currency has more strength relative to another, right? So you can use this economic calendar. It gives you reports from yesterday, tomorrow, previous week, this week, next week, previous month, this month, and next month. You can also set change the time zone to your country's time zone, so it actually changes here, and then you can identify at what exact time this report would be released in your own country's time zone, right? So remember, NFP report is released at the first Friday of the month at 8:30 Eastern time, and so you also want to use this economic calendar to take advantage of the reports, understand what's happening, understand if the unemployment rate is actually increasing or is actually reducing, because you're trading currencies and it's going to have an effect. Whatever happens in the economy of a country would have an effect on the currency of that particular country, right? So NFP is released every first Friday of the month at 8:30 Eastern time. Make sure you do a conversion, so you don't wait at 8:30 your country's time and say that the news was not released. Okay, so we're going to talk about Consumer Price Index, which is the CPI. Consumer Price Index. So CPI is an index released by the US Bureau of Labor Statistics that measures the change in price of a representative basket of goods and services such as food, energy, housing, clothing, transportation, medical care, and education. You can also call the CPI Retail Price Index or Cost of Living Index. So the CPI basically measures inflation, a sustained rise in prices in an economy, and it is experienced by consumers in their day-to-day living expenses. Remember, the CPI does not include investment items such as bonds, stocks, real estate, and life insurance. So these items relate to savings and not day-to-day consumption expenses. Okay, so let's look at the importance of CPI. Someone says he can't hear me anymore. Okay, yeah, can hear me now. So CPI is the most widely used indicator of inflation. So if the CPI is increasing, then it gives the central banks the necessary supportive data to hike interest rates. And higher interest rates are bullish for the country's currencies, right? I mean, traders and investors would want to take advantage of the increase in interest rates. So the CPI is a key indicator to measure inflation and changes in purchasing trend. So the CPI, or the increase in CPI, is what most traders think of as the inflation rate. It's used by traders, it's used by retailers in predicting future price increases. It's used by employers in calculating salaries. It's used by government in determining the cost of living increases for social security. Now, you can also get reports on the CPI on the OctaFX economic calendar. And like I said, it's important that you pay attention to fundamentals, pay attention to economic events, right? So that you don't just wake up one day, do your analysis on the charts, conduct your analysis, and price just starts going the wrong way with a huge spike because some central bank chairman or speaker just comes out and says something when you are not aware. Okay, so it's important that you pay attention to fundamentals, pay attention to reports from this economic event, so that you can apply that to your trading. Okay, so the CPI is released at 8:30 Eastern time on the second or third week following the month being covered. So the CPI is released at 8:30 Eastern time. Remember to do a conversion on the second or third week following the month being covered. It's also important to look at CPI excluding food and energy, where some of the more volatile and closely watched components are clothing, tobacco, airfares, and new cars. So just like you see here, So this is like this picture is from the OctaFX economic calendar. So you can see the consumer price index. You can also see that the reports for consumer price index excluding food and energy is different. This is for year over year, and this is for month over month. That's why you have YOY and MOM, right? So it's important that you also look at the CPI excluding food and energy. So we have people that we call the economic assistants, which collect price data on goods and services from thousands and thousands of retail stores, service establishments, doctors' offices, rentals units all over the United States, and they send this data to these guys that we call the commodity specialists in the National Office of the Bureau of Labor Statistics. Now, these commodity specialists already have detailed knowledge about some certain goods or services. So what they do is they just review the data, check for accuracy and consistency, and make necessary corrections or adjustments if make necessary corrections and adjustments. I was going to say if necessary, but yeah. So remember, release at 8:30 Eastern time. Do your conversion. If you're in Nigeria, you just add 5 hours to that, and you get the exact time it will be released in Nigerian time on the second or third week following the month being covered. Now we're going to look at the gross domestic product, GDP. If you study economics, you must have come across these terms. Somebody says, OctaFX, please try to record this program for those that are not online. Yeah, this video is going to be available for you to come back and watch again. So after the live, you can just check and it's going to be available for you to watch again. So let's talk about gross domestic product. Now, GDP is the total value of the goods and services produced in a country over a specified period. The GDP, total value of goods and services produced in a country over a specified period. Now, the GDP was adopted as the main measure of a country's economy at the Bretton Woods Conference in 1944. And the GDP does not include sales of used goods, illegal activities, black market, non-monetary compensated work, and unpaid work. It includes, government spending, business and consumer consumptions, net exports, investments. It's also calculated. GDP is also calculated yearly, but it can be for any time period. Now let's look at the importance of GDP. So GDP tells us if an economy is expanding by producing more goods and services, or if an economy is contracting due to less output. So it gives you an idea of, is the economy expanding? Are we producing? Are we reaching out more by producing more goods and services, or are we contracting due to less output? By less output, we're talking about less produce, right? The second importance is it tells you how a country's economy is performing relative to other countries' economies around the world. Like I said, guys, in the Forex market, you're trading two currencies. So you want to pay attention to how this currency is performing relative to how this other one is performing, so you can get an idea of the strengths and the weaknesses of these two currencies, and you know which one to buy and which one to sell. The GDP data is released during the final week of the month. The first estimate is released during the final week of the month, immediately following the end of a calendar quarter. End of a calendar quarter is basically the first 4 months, right? So the GDP reports can also be found at the OctaFX economic calendar. This is also an example of what it looks like. I've showed you guys how you can access the calendar and when to expect the gross domestic or reports from the gross domestic product. It can be for any country, guys. It's not just the USA. So if you're wondering, the gross in GDP indicates that products are counted regardless of their subsequent use. So a product can be used for consumption, a product can be used So somebody says, please explain better when GDP news is being released. Okay, I'm coming to that. So a product can be used for consumption. A product can be used to replace an asset, can be used for investment, but in all cases, the product's final sales receipt will be added to the total GDP figure. And the domestic in GDP basically means that goods and services are counted, or goods and services that are produced within a country's border, regardless of the nationality of the producer. So if, let's say, the producer of a certain brand of butter is owned by a Japanese, but the factory is in the United States, it's going to be counted as part of the USA's GDP, right? So it's counted regardless of the nationality of the producer. And the product in GDP basically means, the product, what is being produced. Okay, and remember, it doesn't include sales of used goods or illegal activities, black markets, non-monetary compensated work, and unpaid work. So someone asked about when it's been released, right? I'm going to go over that again right now. So the GDP data is released during the final week of the month. The final week of the month is basically the last week of the month. And the first estimate is released during the final week of the month, immediately following the end of a calendar quarter. The calendar quarter is like the first 4 months of the year, right? We have 3 calendar quarters in a year. We have 12 months, 4 months into 3, right? So in the United States, the GDP is measured by the Bureau of Economic Analysis within the US Commerce Department. Remember, if you don't understand whatever is being taught right now, you can come back to this video and watch to understand better. So I'm going to go over to Fed, the Federal Reserve System. The Federal Reserve System, also known as the Federal Reserve or simply the Fed, is the central bank of the United States. Let me look at the comment section, see if you have questions on GDP before How do the news affect swing trader and how do you trade it? So the news affects the market. The news influences the market, regardless of what type of trader that you are. The news is also going to influence the market, which will affect your trading decisions. So swing trader, scalper, day trader, position trader, whatever trader that you are, the news or economic events will affect the market and is also going to influence your trading decisions, right? Okay. Somebody says, please, I don't know how to start and what channel do we connect to get the news? Okay, like I said, you can use the OctaFX Economic Calendar. You can find it on the OctaFX website at octafx.com. You go to the Economic Calendar, which you would find at Analysis and Education, and you can get an idea of what the exact report on each economic event is. All right, so let's talk about the Federal Reserve System. So the Federal Reserve System, like I said, is also known as the Fed, or simply Federal Reserve, is the central bank of the United States. It was created by the United States Congress in 1913 to provide the US with a safer and stable monetary and financial system. It was created by the United States Congress in 1913 to provide the US with a safer and stable monetary and financial system. The chairman of the Federal Reserve is Jerome Powell, who assumed office since February 5th, 2018. He is the 16th person to have held the position and will continue to serve a 4-year term. Now, before Powell's appointment, he served as the member of the Board of Governors from May 25th, 2012, and he also currently serves as the chairman of the FOMC. The FOMC is the Federal Open Markets Committee, which looks after monetary policy. So what's the goal of the Fed? The goal of the Fed is to ensure price stability and sustainable economic growth. So the Fed basically defines price stability as inflation rate of 2% in the long term, and we know that the US inflation rate is way higher than that right now. So the second goal of the Fed is adequate long-term interest rates. This works alongside price stability, and if an economy is stable, then the long-term interest rates remain at a very moderate level. The third goal of the Fed is maximum employment. Somebody's asking when NFP is released. Okay, I'm going to take your questions once I'm done talking about the goal of the Fed. So the third goal of the Fed is maximum employment, and the fourth goal of the Fed is to preserve the purchasing power of the US dollar. Okay, so and you're seeing this example or this illustration right here. I'm going to zoom in a little bit and explain the three key entities in the Federal Reserve System, which you have here. So number one, the US Central Bank. The three key entities in the Federal Reserve System, which is the Board of Governors, the Board of Governors, the Federal Reserve Board of Governors, the 12 reserve banks, and the FOMC. Those are the three key entities that we have in the Federal Reserve System. Now, monetary policies that are being set out by the FOMC oversees the open market operations of the Federal Reserve System. So we have the Federal Reserve System, which is the US Central Bank, and we have three key entities in the Federal Reserve System. So we have the Federal Reserve Board of Governors, we have the 12 Federal Reserve Banks, we have the Federal Open Market Committee. I'm going to explain the 12 Federal Reserve Banks and give you guys, the names of these banks and their geographical or geopolitical area that they represent. So these are the five key functions of the Fed: conducting the nation's monetary policy, helping maintain the stability of the financial system, supervising and regulating financial institutions, fostering payments and settlement system safety and efficiency, and promoting consumer protection and community development. Okay, we also need to talk about the Congress. And the job or the work of the Congress is to oversee the Federal Reserve System and its entities. So like I said, you have the FOMC, you have the Board of Governors, you have the Federal Reserve Banks, which are the three key entities in the Federal Reserve System. So the FOMC consists of the members of the Board of Governors and Reserve Bank presidents. The chair of the FOMC or the chair of the board is the FOMC chair. So the board is being referred to the Board of Governors. So the chair of the Board of Governors is the chair of the FOMC, which is Jeremy Powell. And the Board of Governors is an independent agency of the federal government. And we have the 12 Federal Reserve Banks, which are the operating arms of the Federal Reserve System and are supervised by the Board of Governors, 12 Board of Governors. So what are these 12 Federal Reserve Banks? And we're going to look at the geographical area of this 12 Federal Reserve Banks. So there are 12 Federal Reserve Banks in the United States, and upon establishing the Federal Reserve System, the United States was divided geographically into 12 districts, right? So each district was separately incorporated with a reserve bank. Now we have 12 districts. We have Boston, New York, Philadelphia, Cleveland, Richmond, Atlanta, Chicago, St. Louis, Minneapolis, Kansas City, Dallas, and San Francisco. So you can as well keep this in mind, the 12 Federal Reserve Banks, or the geographical area of the 12 Federal Reserve Banks in the United States. Okay, let me just look at the comments quickly again. So members of the board of governors, or the FOMC chair, or the chairman of the Fed can make speeches from time to time, which is why it's also important to pay attention to reports and speeches from the chairman of the Fed, of the chair of the Fed, and the members of the board of governors. Okay, because whatever it is they say about the economy also plays an important role in the domestic currency rather. All right, let's talk about take profit and stop loss. Someone wants to know what FOMC is, so let's take it back. FOMC stands for Federal Open Markets Committee, and the FOMC meeting refers to the 12 members of the FOMC, and these 12 members meet 8 times a year to discuss monetary policy as well as some economic and financial forecast. Now, FOMC are the key events in the financial market, and for a lot of traders, FOMC is considered to be one of the most important events on the economic calendar. So you see, this is the reason why you should pay attention to speeches and reports from these economic events, and most importantly FOMC meetings and NFP. Basically all meetings, all economic events play a huge role. All right, so let's talk about take profit and stop loss. Take profit and stop loss. So take profit is an order sent to your broker to automatically close an open position in profit at your preferred price. It halts further advance in profit and guarantees a specific profit after a level has been hit. So like I said, with the example I gave earlier, I said, with take profit, you can tell your broker that I'm buying a certain asset at, price B. If it gets to price C, close my profit there. I'm good with that profit. I want to take my profit there. So you get to decide where you want to take your profit. That's why it's an automatic order to close your profit at your preferred price. Okay, so yes, it's going to halt for that advance in profit. I mean, if the market moves deeper into profit after hitting your take hitting your take profit and securing the profits for you, you're not going to get any other profit if the market continues to move in your direction, right? But it's going to guarantee a specific level of a specific profit after a level has been hit. So let's say, for example, I buy asset B at $30, and I'm like, I tell the broker, by telling the broker, this means that I am putting my take profit values on my trade, right? I'm modifying my trade to put my take profit values, and I'm telling my broker that I want to take profit at $40. So I'm buying asset B at $30. I want to take profit at $40, right? So if asset B gets to $50, I'm not going to make the rest of the profit that should have been made from $40 to $50. But my broker is going to secure my $40 that I have set as my take profit level. Okay, so for stop loss is basically an order sent to your broker to automatically close an open position in loss at your preferred price should market go against you. It halts any further advance in loss of capital. So I know a lot of traders, I don't want to say beginner traders, but yeah, a lot of traders don't like the sound of losing in the forex market. But losing is, or losses are, an integral part of trading. What you can do is to minimize your risk, control what you risk in the market, and that way you're already getting an upper hand with your trading, right? So with a stop loss order, you're telling your broker, let me use that same example I used for asset B, right? So let's say I'm buying asset B again at $30, and my take profit is still at $40, right? But I tell my broker that this is where my take profit is at, but I am aware that markets can go against me, so I want to put my stop loss at $25, right? So I want to put my profit at $25. I want to put my take profit at $40, right? So that if the market continues to go lower against me, I wouldn't lose more than I want to. Okay, so that's why you should use, that's what a stop loss order is for. I'm going to talk about why you should use them, but basically it halts any further advance in loss of capital so that you can have, capital to place more trade, right? Okay, so why do you need take profit and stop loss? Now, your most important job as a trader is to maintain or is to manage and preserve your trading capital, right? That's your most important job as a trader. Now, stop loss or stop loss orders are implemented to ensure that your losses won't grow too big. Okay, guys, you can make money from trading, but if you don't have money to trade, then you can't even trade to make money, right? So at all times, you want to make sure that your risk is being managed and you're making use of stop loss orders. Okay, so that's why you need a stop loss. Imagine that you place a trade and you don't use stop loss orders and the trade just keeps advancing further in the wrong direction or in the direction that lets you lose money, and you just don't want to use a stop loss. You're putting all your trading account at risk, right? All your balance at risk, and you don't want to do that. You always want to make sure that you identify what you want to risk on the trade, and you use a stop loss order to secure that risk and make sure that the losses won't grow too big. Now, for take profit orders, look at the comment. Oh, somebody says she's learning. Okay, so take profit orders are implemented to ensure that you make profit from your trades should market reverse. Now, you don't want to be on a trade and still be on that trade and market reverses and goes below your entry price. No, you don't want to do that. Take profit orders are implemented. You should implement them to set specific levels or targets where you want your broker to close your trade in profit for you, right? You can identify that by using swing highs and swing lows. The videos that explain that are in the link in description, so you can use the link in description English playlist to watch and learn how you can identify your levels. So that's take profit and stop loss and why you need it. It's important with trading, guys. You don't just want to come into the market and trade blindly, just click on buys and sells and just expect to come back and find the trading profit. You don't want to do that. You don't want to expose your trading account to a high amount of risk, right? So that's why you need to take profit and stop loss orders. So we're going to talk about briefly fundamental and technical analysis, right? So I'm going to introduce you guys to fundamental and technical analysis. Now, fundamental analysis is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. In simple terms, fundamental analysis involves trading the news, right? You're trading based on economic reports and you're using that to assess or using these reports from the economic events to influence your trading decisions. Now, currency rates, the basic instruments of the foreign exchange market are affected by major financial news, fundamental statistical reports, and geopolitical events. These are some Forex news websites where you can get economic reports on economic events happening in different countries. So the OctaFX economic calendar, investing.com, Bloomberg, Daily FX, FX Trade, and Forex Factory. Guys, I'm going to have a time or a section on this webinar where I take all the questions. Okay, so just save your questions for the Q&A session. All right, so let's talk about fundamental analysis briefly. Technical analysis rather. So technical analysis is the study of historical price action in order to identify patterns and determine probabilities of the future direction of price, right? So with technical analysis, you're basically looking at what's happened before, using the data or the price action of what's happened before to identify future patterns and kind of predict what would happen in the future. Now, the main evidence of using technical analysis is that theoretically, all market information is reflected on the price. So technical analysis is basically trading based on what you see on your chart, right? And technical analysts look for similar patterns that have formed in the past and will form trade ideas believing that price could act in the same way that it did before. Okay? Technical analysis involves the use of trends, support and resistance, indicators, chart patterns, and candlestick patterns. Again, guys, the English playlist in the link in description explains these trends and support and resistance. These things that make up technical analysis in detail. So you can use the link after this webinar and get a better understanding. Okay, so I am going to open the Q&A. I'm going to get into the Q&A session and look into the comments section to get questions for you guys. So this is that time, guys. If you had questions and you that you wanted to ask, you can go ahead and type your questions in the comment section. Adisa says, which one is best traded, fundamental or technical? Well, I would say you can apply the two to your trading, right? I mean, let's take this example. So if you want to lift, if you want to do this weight lift that you do in the gym, right? If you try to use one hand, it's going to be difficult compared to when you use your both hands to lift, right? So that's just how it is. You use the both of them and it makes it easier for you to analyze the market. So I'm not going to say one is better than the other. I mean, you can use both and improve your entries and improve in your understanding about the Forex market. How to apply fundamental analysis on a trade. So fundamental analysis gives you an idea of strength and weaknesses of currencies. Basically, that's just basically. Also helps you understand what's going on in a country, right? What's happening to the economy. Like I said, the economy affects the currency. Joshua Onoja says, what is break even? So break even is basically when you try, it's two things actually. So it can be when you close a trading day with no profits and no losses. It can also be when you put your stop loss at your entry point, right? So when they say, or when you hear set your stop loss to break even or break even, what this means is that take your stop loss from, take your stop loss from either above or below your entry price, depending on if you're buying or selling, and set it to your entry point. And you can only do this when your trade is in a certain amount of profit, right? So when you set your stop loss to your entry point, where you executed that trade, what this means is that if the trade reverses and goes back to your entry point and below or above, then you don't lose from that trade because your stop loss is at your entry point or a little bit in profit, and you're safe. That's a risk-free trade. What is a buy stop order? That just means you have been missing the online workshop for complete beginners. So you can check previous videos with the link in description to watch and understand buy stop orders. Okay, I think that was in episode 2 that we discussed that. But the good news is you're not late anyway. We still have one more episode where we talk about risk management, and also you can rewatch the previous videos. So see. Adigri says you're too good. Well done. Thank you. All right. In the absence of any other question, I would like to thank you guys for participating. But no, that's not the end. We'll have to test your knowledge, right? I need to be sure that you learned something today. I need to be sure that you actually learned something today. So we're going to do a quick brain test. And if you know the answers to these questions, you can go ahead and type the answers in the comments. Okay, so the first question is, the ask price executes sell orders, true or false? The ask price executes sell orders, true or false? Or false? Adigris says false. Okay. Julfika Ali says false. Gospel David says true. Well, the correct answer is false. So, like I said, the ask price executes buy orders. The ask price is that price above the bid price. So when you want to place a trade, you have a red line and a blue line. You basically have two lines, whichever color it is, right? The one above is the ask price, and that is where your buy orders will be executed. Second question: what is the full meaning of CPI? What is the full meaning of CPI? Let me know in the comments. Let me know in the comments section. What is the full meaning of CPI? So Ade Grace says consumer price index. King says consumer price index. Okay, well, that's the correct answer. Consumer price index. That's the full Uchina Precious consumer price index. Correct. Third question and final question. NFP gives reports on agricultural and farm products. True or false? NFP gives reports on agricultural and farm products. True or false? Mark Anthony says number 3 false. Adigre says false. Carbis Dale says false. Chukunonso says false. Are we correct? Nobody's saying true. Well, I guess that means you guys understand NFP, because false is the correct answer. NFP does not give reports on agricultural or farm products, right? So the answer to the third question is false. Remember, NFP gets its name from the jobs that are not included, which are farm workers, non-profit organizations, those that are employed in private households. Okay, so it was an amazing webinar. This is the third episode of the online workshop for complete beginners. We'll still have the fourth and the last episode, and this is what you will learn in the last episode. Risk management, right? So you would learn what risk management is, you would learn about leverage, you would learn about how to choose your risk to reward ratio, and you would also learn about why you should use proper risk management. Okay, so do well to join next time, and thank you guys for coming. I would see you next time.